Hi, this is Optimus Futures and would like to welcome you all to the second video in the series introducing the OBIO method. In the last video, we talked about the different indicators that make up the OBIO. We talked about the trend information box up here. We talked about the momentum shift indicator that's sitting in the window down in the lower part of your chart. We talked about the oversold and the overbought channels, the red and green channels. We talked about the middle band that sort of runs in the middle of this range. And we talked about the different colored dots and what they mean. In this video, we're going to take it one step further and we look at OBIO holistically to analyze its application and its versatility as a method, as a source of information, and as a valuable tool to any technical trader looking to improve or enhance their technical analysis skills, or to be able to just understand what the market is doing a little bit better. We have touched base on this before, that the OBIO is actually an extremely dynamic method of trading and technical analysis that can be stretched and applied on pretty much any trading style, any trading system, and is perfectly suitable not only for beginner traders, but is actually also very valuable for advanced traders just looking to add bits and pieces to their trading method and the way that they analyze the markets to be able to better understand what the market is doing. However, that said, like all methods and systems and indicators out there, the OBIO is not a foolproof holy grail method. It is not a method that will consistently give you ideas for trades in every market, in every market condition. It is still suitable more to particular market conditions, more so than others. And in this video, we're going to be looking at all of those factors and the different kinds of market conditions where the OBIO will actually be shining at its best. In the previous video, when we were talking about the different indicators that make up the OBIO, you may or may not have noticed that pretty much every indicator that we talked about was an underlying indicator or source of information for market momentum, which is how fast a market is currently moving. And so that should in itself give you a good understanding of which situations suit the OBIO better. That is, of course, going to be situations where the market is either working towards a breakout play or is already moving strongly in one direction and with good momentum. And so these are going to be the situations that will normally yield good tradable information, so to say, with respect to the OBIO. Let's actually look at the chart over here and try to analyze certain market conditions that we feel are favorable or more suitable for the OBIO, and we'll also look at certain market conditions that we believe may not be as well suited to the OBIO, at least in terms of using the OBIO information as a concrete way to enter or exit trades. So what we're looking at right now is actually one of those situations where we would be very cautious applying the OBIO, or at least using OBIO as a direct way to enter or exit trades. And that is because the market appears to be mostly indecisive. Yes, we're seeing some strong moves in the market, such as this one over here, this large bearish candlestick over here, this sharp move up and then this sharp move back down, but we're not seeing any consistent patterns or any predictable pattern for the market at all. We're actually, all of this move towards the downside was followed by a very sharp move up, and then of course we had the move down, and then we had the move back up, and then we had another sharp move down, another sharp move back up. And so these are going to be the situations where that we're trading the OBIO or trading in general, like even excluding the OBIO altogether, is going to be very tricky. And so the OBIO, if you still have the OBIO indicators up and you still have these bands up, these can actually be a very good visual aid in helping you understand that this may be a difficult market to trade. So if you're not exactly working with the OBIO and you don't have any of these bands up on your chart, you're just looking at price action, you may still actually consider this to be a trending market. I mean, it's still downtrending. Technically, of course, we're seeing lower lows and we're seeing lower highs as well. So the market is in this period generally downtrending. But just looking at the gap between the red bands and the green bands, the red bands, of course, being the overbought bands, and the green bands being the oversold bands, you'll see that the vast difference between these two bands indicates that the market is extremely volatile. And so that can be a very good visual aid in helping you to exercise caution in your own trading. You, again, may or may not be directly using the OBIO as a way to enter or exit trades, but just having these indicators on your chart and knowing when and how to use them, you'll be able to spot situations in the market that may actually be very tricky to trade, and otherwise without the OBIO may not be very easy to spot. That said, let's also look at some of the other market conditions that may actually be a little bit more suitable to or for OBIO. Let's look at this situation over here. This is a pretty textbook OBIO favorable sort of a market condition. We have the market sort of coming off from a downtrend, and it starts to consolidate. As soon as it starts to consolidate, you'll notice that the bands start coming closer together, and that is a good indication in itself that the market is moving from a trending or more of a volatile trading period to a period where it's going to be consolidating, and the volatility will just not be as high. And so that usually is an indicator of an impending breakout. And so that's exactly what we see over here. So these are given market conditions where the OBIO will actually be very, very useful, and again will give you good visual aids and a better understanding of what the market is trying to do. So as soon as the market sort of breaks out of this consolidation pattern, this wedge pattern over here, you'll notice that the distance between the red and the green bands starts to increase. And so that's telling us that the market is actually starting to get more and more volatile now. So as soon as the market starts to get more volatile past a period of consolidation where the volatility wasn't as much, that is a very good underlying development for a breakout play. And so that is actually one of those situations where if you enter timely, it can actually result in really profitable trades down the road. And that's exactly what we actually saw develop over here as well. You'll see that as soon as the market breaks past this descending resistance trend line and is able to consistently hit the red bands over here, the overbought bands, and the market didn't rebound, it actually stayed for the most part above the middle band. That these are all good indications that the market is definitely gearing towards a breakout towards the upside. And so that's exactly what we see later on as the market establishes itself more into a more solid and mature uptrend. And as soon as the market tries to do that, you'll see that this distance between the bands starts to increase. Look at the distance over here. Again, that is implying very sharp increase in volatility. Of course, this time to your own advantage. If you were in long on this trade, you were able to see the story being developed here. You were looking at all the constriction in the overbought and oversold channels over here. You were able to see how the market was staying above the middle band and not rebounding sharply off of the overbought channel over here. All these were good indications that the bullish momentum was strong in the market. And so that really made up for a very, very a high probability setup for a bullish play. So this is again one of those situations where the OBIO will shine, the market consolidating and then building itself towards a breakout. Let's actually look at one more example of a market situation that is that would be suitable with the OBIO or not suitable with the OBIO. So this is a good example again of a really choppy looking market. And now if you look at this market in general without the OBIO indicators at all, you're still looking at a choppy market. But having the bands and the OBIO on your chart actually makes it visually a lot better for you to analyze and understand the market is not in its ideal state to be looking for trades in. So again, a choppy market condition, not a very good situation for you to be looking to work with the OBIO in. And here's a downtrend that triggered off of a period of consolidation. So you'll notice that while the market is actually volatile and it's just creating these ridiculous swings in the market, you'll see that the bands, there's the difference between, or the distance between the bands is actually pretty decent, again implying that the market is extremely volatile. But then what happens as the market starts to condense and consolidate within a more tighter channel? Of course, it means that the bands start to come closer together. And so naturally, you have that constriction here and that period of really tight consolidation that you know will more times than not actually result in a breakout condition. And so that's exactly what we see here. As soon as the market sort of breaks underneath this support trend line and really tightens up, look at the constriction in the bands here. Just before the market actually breaks towards the downside. As soon as it does, the most important indicator here that should tell you that this is a genuine breakout is how the market is actually not rebounding off of the oversold channel over here. It's actually right in line with the oversold channel, but you'll see that it's actually not rebounding off of it at all. And that's a good indicator in of itself that the downtrend here is strong and the sell side momentum is definitely strong enough for the market to create that typical breakout play. I'll give you another example of a situation that looks similar but actually didn't work out as well. And that would be this situation over here. Once again, we have the market being very, very volatile. And again, the distance between the two bands is massive. But then notice how the market, as it's again starts to tighten up and trade within a tighter zone, that the bands start to come closer together and constrict. And we actually do have a very good situation, which looks very similar to the one that we were just discussing a moment ago, where the market actually breaks towards the downside. But notice the difference here. Notice the appearance of the three dots in here, and the fact that the market is rebounding off of the oversold channel. That is a very good indicator in itself. You'll see that the dots actually appeared over here as well when the market broke towards the downside, but the market didn't respond to these dots at all, or the oversold channel. Over here, we see the market actually responding to these dots and the oversold channel. You'll see that the market actually made an initial bounce, tried to come back to this band again, found decent support off of it, and then rebounded yet again. This is going to be an indication for you that the market's still actually within this larger frame of consolidation, and it's just generally volatile. And so, yeah, once again, the overbought, oversold channels over here coming into play and giving you an early warning that the breakout play that you're possibly looking for here does not exist. And so, yet again, a good example of how the OBIO can actually help you make better trading decisions, whether it is entering a trade, exiting the trade, or potentially avoiding a trade altogether. So that said, that pretty much wraps up this second video in the series. Just to sum up, the OBIO is an extremely versatile and dynamic trading method that can be applied to all varying kinds of trading styles and trading methods and trading systems. And when it comes to using the OBIO indicators in general to have an understanding of what the market is trying to do, it is very applicable and usable in pretty much all kinds of market conditions, including the ones where the market is trending, as well as the ones where the market is choppy or indecisive. However, when it comes to actually using the OBIO as a tradable method, or using the entry signals that we will actually be talking about in the next video, as far as the OBIO is concerned, we talked about how certain market conditions can actually be more favorable to a trader trading the OBIO or applying it directly into his or her trading compared to other market conditions that may not actually be as suitable. So that pretty much wraps up the second video. We will see you in the third installment or the third video in the series here that we're doing to introduce the OBIO method.